Thank you so much and welcome to the webinar session, Securing Low-Cost Capital, Financing and Scaling Building Energy Upgrades. My name is Cassie Carroll. I'm with the Energy Sense Resilience Center at the University of Illinois System. And we're so excited to be partnered with the Village of Oak Park and Climate Ready Oak Park to host this session today. So our session today will cover we'll break down really how to leverage available capital to fund comprehensive energy efficiency, renewable energy, water conservation projects, and more that pay for themselves. This webinar is really designed to help building owners, developers, facility managers navigate really the evolving landscape of low-cost, long-term financing in Illinois for energy and sustainability projects. So we're really thrilled here today to have some wonderful speakers that will share their knowledge about different sorts of low-cost capital programs that can help you advance your energy efficiency upgrades, but also programs that are available in the Village of Oak Park to help building owners in the region really grow reduce their energy use in their buildings, but grow the sustainability work within the village. So I'm excited today. Energy Sense just really quickly wanted to share really our mission is to empower organizations with practical solutions for climate, energy, and sustainability. We do a lot of different work. You may have seen us, and we are a resource for energy code training for the state of Illinois. We help, our core is energy efficiency services, but we also run the Illinois Green Business Program. We do climate action planning and help organizations with renewable energy feasibility. So we're thrilled to be partnering with the Village of Oak Park and its benchmarking program to help really advance building energy efficiency across the community. So we have a wonderful lineup of speakers today. We have Lindsay, who's the Chief Sustainability Officer at the Village of Oak Park. We've got Claire, who's the Vice President of Climate Bank's programs at the Illinois Climate Bank and Illinois Finance Authority. And we have Mohammed, who's the Deputy Director of the Cook County Department of Planning and Development, but runs the CPACE program. So those are the three different programs we will run through today. And without further ado, I am going to transition it over to Lindsay to kick off our session today and talk about what's happening at the Village of Oak Park and all of the great things that are available for Oak Park building owners. Thank you, Lindsay.
Great. Thank you so much, Cassie. I am Lindsay Rowland Naradka, Chief Sustainability Officer for the Village of Oak Park. You can go to the next slide. And we've been partnering with Cassie and her team at the Energy Sense Resource Center to help our building owners kind of do their next steps with the benchmarking program. So the work that we do here in the Office of Sustainability is related to our climate action goals, which are drawn out in the Climate Ready Oak Park Plan. So this is a long-term climate action plan that was adopted in 2022. It is broad-reaching. It includes both adaptation actions, making us more resilient to the changes we anticipate and are currently seeing because of climate change. It is rooted in equity and also includes a lot of actions for mitigation, reducing the driving causes of climate change. The actions within this plan are in many different sectors, and all of it is related to our commitments that we made when the plan was adopted. The programs that we're talking about today are going to be most related to the first two commitments, which is a reduction in community-wide greenhouse gas emissions by 60% by 2030, with a goal of net zero community-wide by 2050. So we know from our greenhouse gas inventories that about 70% of our emissions are related to our building energy use. And so we center a lot of our programs around the buildings in our community. Next slide, please. So one of the programs that we've had in place since 2023 is our energy and water benchmarking ordinance. This ordinance requires any building in Oak Park over 10,000 square feet to annually report energy and water use to the village. This helps our building owners to track building performance. We use Energy Star portfolio manager as the tool. That tool gives a score, either the Energy Star score or an energy use intensity score, that can help our building owners understand how their building is performing compared to buildings of similar types. Um, that provides our building owners with a lot of information about, could they be doing something better? Could they be doing something different? And it also helps provide the village information of what our building owners need in terms of the technical assistance, incentives, or other tools in order to take that information and turn it into action. We also are beginning to work on developing a building performance standard. We're just at the beginning of this process, and we'll probably take it to our board for consideration in the next year. A building performance standard is the next step for benchmarking, which is we're requiring the reporting so the building owners sort of know how they're performing. And setting the standard creates a roadmap for the same building owners for how to get to that, probably that net zero goal by 2050. So it's a long-term plan for taking that information and turning it into action. And so because we're requiring the buildings provide this information and have this information, and because we have a plan to help create roadmaps to get to net zero, we also are really mindful that we're connecting our building owners to the knowledge and the tools and the financing and the incentives that they need to make those changes. And that's part of why we partnered with Cassie and her team, and it's why we're offering educational opportunities like this workshop. And we're very excited to have Clara Mohammed on here to talk about some of the resources that exist within the Illinois Finance Authority in Cook County. Next slide. And then one program that we do have in the Village of Oak Park as well to help our commercial entities, our small businesses, is our Climate Ready Business Grant. This is a grant. It's up to $6,000 to cover 50% of the costs for eligible improvements for the business. This could be work to improve energy efficiency, to do electrical upgrades, to install EV chargers, to put on renewable energy, or to move forward zero waste initiatives and help them better comply with some of our other requirements around polystyrene and plastics. And so any business that is in the Village of Oak Park with an active business license and who is in a building that is in compliance with the benchmarking ordinance, either by being less than 10,000 square feet or by benchmarking, are eligible for these incentives. And that's it. So thank you very much for everyone attending today, and very excited to hear from Clara Mohammed. Thank you, Cassie.
Wonderful. Thank you, Lindsay. It's great to hear about all of the wonderful work that's happening in the Village of Oak Park and how you're taking the crop plan and really growing the sorts of opportunities for engagement and also action on the plan. So thank you for sharing that today, and thank you for supporting this webinar session today as well. Um, I'm leaving this slide up here because I failed to mention that if you have questions throughout today's session, please pop them in the chat and we'll answer them at the end of the session. This webinar is also set up as a meeting, so if you do want to unmute at the end of the session and ask your question, you are more than welcome to do that. But please put it in the chat, and we'll be happy to answer those questions at the end of today's session. Okay, so without further ado, thank you, Lindsay. We are going to introduce Claire Brinley, who's the Vice President of Climate Bank Programs at the Illinois Climate Bank and Illinois Finance Authority, to share more information about not only the awesome programs that they have under the Climate Bank, but also talk about some of the federal incentives that are still available and how you can leverage those for your building to do energy efficiency and sustainability projects. So Claire, thank you so much for being here.
Thank you for having me. We can go to the next slide. I'll just start with a brief overview about who the Illinois Climate Bank and Illinois Finance Authority is. So the Illinois Finance Authority has been around for a while as a small state agency, primarily focused on public finance work. But in 2021, under the Climate Equitable Jobs Act, we were given a new mission. We were established as the official climate bank of the state of Illinois under CEJA. And kind of a little bit about our purposes up on the slide here. And I think that this third bullet point kind of really highlights what our mission is, but it's to accelerate the investment of private capital into clean energy projects in a manner that's reflective of the diversity of our state. And so since getting that name, we've gone out and undergone a number of activities to bring money for clean energy to the state of Illinois and distribute it in an equitable manner. And so the first thing I want to talk about, though, is not specifically a climate bank program, but as Cassandra alluded to, I would like to talk about some of the federal tax incentives that are still available for clean energy. So we can go to the next slide. So as you may or may not, we can start on the first one, but as you may or may not have heard of, the Inflation Reduction Act allocated a ton of money to tax credits for various clean energy projects, some for residential folks, some for individuals, a lot for commercial and business users, kind of all with some sort of clean energy focus. Very importantly, these tax credits are not like a grant where there's often a limited amount of money and it's a competitive process. These are all uncapped, meaning if your project is eligible for the credit, you receive the credit. There is not a competitive process that you have to go through to get it. And yes, uncapped and uncompetitive. So I just want to start with that. And I think there's maybe some miscommunication or misunderstanding about which tax credits are still available under the Inflation Reduction Act after the changeover in administration. So I just want to go through a few of the common ones that you can still claim and talk about them a little bit, with the caveat that I am not a lawyer nor a CPA, so please do not take tax credit advice from me. I just want to let you know that these are still out there. So we can go to the next slide. So some of the most commonly claimed tax credits under the Inflation Reduction Act are these three right here. We have the Commercial Clean Vehicle Credit, which is a tax credit for electric vehicles. This will only be relevant to you if you acquired a vehicle before September 30th, 2025. So that was a while ago at this point, but if you're filing in an upcoming tax year and you or your business did acquire a new electric vehicle, you should be sure to look into claiming that tax credit. There's also tax credits available for charging infrastructure for electric vehicles, as long as that charging infrastructure is energized and operational by June 30th, 2026, which is coming up very soon. But again, if you've been installing EV charging stations over the past couple months, those can be eligible to claim a credit for as long as they are up and running by June 30th, 2026. So if you have installed one in the last tax year or are going to be installing them now, you should be sure to apply for the relevant tax credits for those as well. And then the main one that I'll talk a little bit more about is the investment tax credit, which I'm sure you've heard of. It is for basically any clean energy project, including solar, wind, geothermal, energy storage. And you can get anywhere between 30 to 70% of your project reimbursed by the federal government for installing this clean energy technology. There are obviously caveats to that and deadlines that I will talk about a little bit. But if you are working on any sort of clean energy installation project, you should be looking into the Clean Electricity Investment Tax Credit, because you can get a ton of your project reimbursed for it. So we can go to the next slide. So talking a little bit more about base credits, and again, focusing mostly on the investment tax credit, or ITC. Generally, if your project is under 1 megawatt, you're going to get a 30% credit no matter what. If it is larger than 1 megawatt, 6% is your base credit, and then 30%, you get bumped up to 30%, a 5 times multiplier if you provide with prevailing wage and apprenticeship standards. I won't go too deep into this, but just in general, if you're meeting prevailing wage and apprenticeship standards, you can get 30% again of your project reimbursed from the federal government if it's one of these technologies. And then there are additional bonus credits that you can add on to that if you are located in an energy community, if you're using domestic content manufacturing, things like that. And that's how you get up to the 40, 50, 60, 70%. But again, just want to highlight that if you do want to get that 30% and your project is larger than 1 megawatt, you do need to be following prevailing wage and apprenticeship standards. And that's the same thing with the EV charging installations as well. Yes, thanks, Karen. We're going to get to that. I'm sure you know the answer, which is why you asked. And we can go to the next slide. So I do want to highlight, I think, again, a lot of people are like, oh, didn't those tax credits go away? Yes and no, they are sort of going away. So the deadline for wind and solar projects was moved up significantly by the new administration, but there is still time to perform these projects and claim the credit. So if you begin construction after July 4th of this year, you must place the project in service by the end of 2027, so about a year and a half later, in order to claim the investment tax credit, which isn't a ton of time, but isn't no time, right? That's over a year and a half from now, where you would need to complete the project to receive those tax credits. If you begin construction before July 4th of this year, you don't need to place it in service by that 2027 date. You have 4 years, but you need to be doing continuous construction throughout that whole time. So there's sort of like a safe harbor deadline if you kind of begin construction on your project before that July 4th deadline, you have a little bit more time. And notably, this expiration date is only for wind and solar. Geothermal and battery storage projects are not subject to these expiration dates. So there's on the screen, there's a little bit more information, but you basically have until 2035 to complete a geothermal or a battery storage project in order to get these credits. So for some reason, just in general, geothermal was kind of spared across the administration. So if you're interested in doing geothermal projects, it's much easier to get tax credits for them. And there's other programs out there that are available. So just want to highlight that. We can go to the next slide. And then, yes, Karen hinted about this in the chat, but under the Inflation Reduction Act, for the first time ever, non-federally tax-paying entities are eligible to receive tax credits from the federal government through a mechanism called elective pay, sometimes also referred to as direct pay. It's exactly what it sounds like. It is a direct payment from the IRS. If you do not pay federal taxes, you can still submit a claim for these credits. The IRS kind of treats it as an overpayment of taxes, and then sends you a check for whatever you're owed for the project. Any tax-exempt entity is eligible for elective pay, and it qualifies for any of the three tax credits that I talked about on one of the first slides, as well as I think 9 other types of tax credits are eligible for elective pay. And again, these are uncapped and non-competitive credits. So again, if your entity does not pay federal taxes, you can still take advantage of these credits and of these payments through direct pay. Even if your CPA tells you that you're not eligible, a lot of CPAs aren't really familiar with the concept of elective pay and sometimes have the nonprofits going to them and saying, can you help me file this? And they'll say, well, no, you can't get a tax credit. You're not tax paying. Don't listen to them. They just might not have heard of this new mechanism. But yes, non-tax paying entities are eligible for these credits as well. I think we can go to the next slide. That was just sort of a very quick overview. There's so much more information out there. There's also, more information about deadlines, about foreign entities of concern, who's allowed to work on your project that I just don't have time to go over today. But the Illinois Power Agency, whose slides I stole, has a really great website that kind of goes over all of this and very specifically focuses on elective pay for tax-exempt entities, and I highly encourage you to go over there. It's a wealth of resources and knowledge, and they will also, try to help you out if you have specific questions about your project and how to file. They're looking to help as many Illinois entities, take advantage of these credits as possible. So but just wanted to give a brief overview that those are still out there. You can still claim them, even for wind and solar. You can still claim them. They're not gone yet. So if you're working on a project, please make sure you're taking advantage. Okay, we can go to the next slide. So now I will talk about one of the Illinois Climate Bank's programs that we offer. And one of the reasons I wanted to go over direct pay and the tax credits before that is because it's relevant to this program that we offer. So the Energy Efficiency Revolving Loan Fund is a program managed by the U.S. Department of Energy. They allocated 15.9 million to the Illinois Environmental Protection Agency for this program back in 2024. And then the Illinois EPA then granted 14.3 million of that total to establish and administer a revolving loan fund program for energy efficiency projects. We can go to the next slide. So with this revolving loan fund, the main product that we offer is a bridge loan, which is intended to be a short-term loan that bridges the gap between when you receive incentives for your program, like direct pay incentives, like Illinois Solar for All incentives, like maybe any Ameren or ComEd rebates you might be getting. As we were talking about the credits are super great, but they come in once the project is completed or energized. And oftentimes, you need upfront capital to get the projects off the ground. And that's true not just of the federal tax credits, but also from a lot of utility incentives and a lot of the other Illinois state incentives that are out there. They all come in at project completion. And so this bridge loan is intended to help you leverage those incentives earlier. So, you would estimate maybe that you're going to get $500,000 in credits once your project is completed. IFA will give you a short-term loan equal to that amount, so a $500,000 loan that we expect to be paid off within 12 to 24 months. You complete your project, you receive your incentives, and then you pay IFA back with that incentive money. And we can be pretty flexible on what incentives we'll accept. I have a non-exhaustive list here. The federal tax credits or direct pay, Illinois Solar for All incentives, Ameren or ComEd rebates, maybe other grants that you're getting, like a REAP grant or something like that. As long as it's, going to come in within a relatively short period of time after your project is energized, we can include it in the bridge loan. So we can go to the next slide. So as it's a federal program, there's obviously always requirements associated with it. So this bridge loan product is basically for any building except single family residential. So we can do nonprofit and publicly owned buildings. We can do privately owned commercial buildings. We can do multifamily buildings, but they must have 5 or more units is what we consider to be multifamily. So anything 4 units or less, we cannot do a bridge loan for this program. One of the other requirements is that any improvements that we fund through the bridge loan must have been recommended in an energy audit or energy assessment. So the DOE language is that the project has to address at least one of the following: the energy efficiency of the building, the physical comfort of the building, or the quality of air of the building. And most people, not all 3, just one of them, most people go for energy efficiency. So again, these are energy efficiency improvements to existing buildings, not new construction projects or anything like that. It's you're upgrading a building that already exists. So one thing that I want to point out is that solar alone is not considered an energy efficiency technology because it doesn't reduce the amount of energy that the building is using. It's just, getting it from a different source, which is great. But you can pair storage with other technologies that will make the building more energy efficient. And solar often does, come up as a recommendation on an energy audit. So we can fund solar. It just can't be the only aspect of the project. But we could do solar with energy storage. We could do solar and you're also, upgrading your lighting or doing HVAC. It just can't be only solar. Has to address energy efficiency. And then again, once again, anything that we're funding needs to have been recommended in an energy audit. And we have more information if you're interested about what those energy audit requirements exactly are. You're welcome to reach out to me and I can give you more information, but we're happy to work with you if you have an auditor and work with what you have to try to figure out if we can supplement, existing pieces of information if you've already gotten an audit done that doesn't quite meet our standards. We also have more information on the Illinois Climate Bank website on the Energy Efficiency Revolving Loan Fund page about different places you can go to try to find free or reduced cost audits. Okay. And then this is just a general overview about the loan terms. So we have a maximum of $1 million per project, so per building. But if you wanted to do, multiple buildings, if you were doing 3 different buildings, that's considered 3 different projects. We could do up to $1 million per building. The loan terms are going to be up to 24 months. Interest rates, it will depend on the project, but they will be below market. And interest is going to be due at the time of final payment of principal or at maturity, whichever occurs first. And then the last thing I want to mention is that any projects that are receiving this bridge loan also have to comply with labor and wage benefits and reporting requirements under the Davis-Bacon Act as its federal money. So I just wanted to give a quick example or maybe 2 examples of eligible projects that we might like to see. So maybe there is a school that gets an energy audit done, and in the audit, it recommends installing solar and then also an energy storage system. I don't know why it says multifamily building on their school building. So let's say that they are going to get a $300,000 direct payment through the investment tax credit, and then also a $50,000 Ameren smart inverter rebate. So then we could give them a bridge loan for $350,000 upfront, which then they pay back once they receive the direct pay and the rebate. So that's one example. Another example might be, let's say, a city's public library recommends, redoing their HVAC and lighting and also getting solar on the roof. So maybe they're getting an investment tax credit, a direct payment for $200,000, and they're not getting any incentives for the HVAC or lighting, which is okay, but it qualifies the building as doing an energy efficiency project. So then we would just make that bridge loan for the $200,000 that they're getting through the investment tax credit direct pay. Those are a couple examples. So a couple of ineligible projects, things that we can't fund. So generally, again, as I said, solar projects on their own, if it's just solar, no battery backup or load management software, there's no energy efficiency component there. So we can't fund that project. We can't fund most ground-mounted solar projects, usually because those are community solar projects, and the benefits are being distributed across many different buildings, which is great. But for our purposes, we need to be able to track the improvements to one particular building. So it needs to be attached to one building, not multiple of them. We don't do projects with EV charging stations. That's not really considered an energy efficiency technology. And again, we can't do any new construction. So there needs to have been an existing building with at least a year's worth of energy data that we can use to do an audit on. It can't be a new building. One other thing that I just want to say is that geothermal does count as an energy efficiency technology. So again, if you're doing a geothermal project, it's a really great fit for our program because the tax credits are still alive until 2035. So you have a much longer runway for that. And then it counts as energy efficiency under our program. So we can give you a bridge loan for those tax credits. So again, if you're thinking about doing a geothermal project, definitely reach out to us to see if this bridge loan product might be a good fit. Okay, and then our website is illinoisclimatebank.com. It's sort of new. I guess it's maybe 6 months old, but we have lots of information over there. And I also just recommend signing up for our mailing list to get information on when new products drop as we're continuing to develop and release grant and loan options. And then my contact info.
Thank you very much, Claire. I I think it's so interesting to learn about how you can support and provide bridge loans for these projects because that's definitely a fundamental thing that we see a lot of folks. How do we have the upfront capital to cover some of these initial costs to get the project done when we're going to be owed or we're going to get all this money back? So wonderful that your programs exist. One thing that I did want to emphasize really briefly, and you mentioned this, is stacking incentives. So you mentioned the utility incentives. There's the state incentives for renewable energy or the Illinois Solar for All program. So Claire talked a lot about, the federal tax incentives, and rightfully so. It was so much more clear to understand, what's still available, what are the deadlines, but make sure that you're exploring these other options because for things like solar, there's the state incentives, the utilities might have some incentives, some generation incentives as well, and then you can work with Claire and her team to help provide the bridge loan for that funding that you're going to receive back in incentives, which is so exciting. So thank you so much. I also did want to mention, I know emphasize if you're working with an entity to get an energy assessment to qualify for their programs, just make sure that they align with these requirements. They're aware of those requirements. And again, I think that the Illinois Climate Bank, you offer some great resources to help individuals navigate all of those requirements. So thank you, Claire, so much for your presentation. Again, I see Claire put her email in the chat here, but if you have any questions, please feel free to reach out to her. And please feel free to continue to put questions in the chat. All right, we are going to transition to another opportunity to leverage funding in Cook County. This is also a program that can be accessed statewide as well under the Illinois Finance Authority. But we're going to talk about CPACE, Commercial Property Assessed Clean Energy, and we're going to talk about the Cook County, Illinois program that they offer for the region. So CPACE is another mechanism to fund sustainability and energy efficiency upgrades and leverage all of those great opportunities that the utilities provide and incentives and really get those projects done in your buildings. So, Mohammed, thank you so much for being here and speaking today. I'm going to turn it over to you now to talk about CPACE programs in Cook County.
Thank you, Cassie. This is a perfect segue from a fantastic presentation that Claire has provided. The reason I say perfect segue, we can go to the next slide. And we talk about the clean energy, financing program. It's called PACE, but in Illinois, we call it CPACE. There are about 40 states enacted this legislation to have this program. Only 3 states has both commercial and residential, which is California, Missouri, and Florida. Illinois has commercial, so we call it CPACE, Property Assessed Clean Energy. Now, what is CPACE? Before I even say what is CPACE, very simplistic way that I want to describe is if you own a property and if you take a second mortgage to make improvements and things like that, it's very similar to that, except this program can only fund clean energy retrofits, including renewable and all that. And also, there is a special assessment is required for the security of the loan. Now, this program is actually a direct negotiations between private property owners and private capital providers. What government does, we create the platform for these 2 parties to come in and access the program and then negotiate their own project, the terms and all that. Now, CPACE can fund energy efficiency projects, water use improvements, renewable energy installations, resiliency, and in Illinois, also EV charging stations. And as I said, the assessment that's put in as a security for the loan, they're voluntary. So you do not obviously have to do any of this if you don't want to. But if you do, it's a voluntary assessment contract that the capital providers is going to need. One good thing is this assessment runs with the property, meaning if you are a private property owner and then you do these improvements and then then you sell the building in next few years, the CPACE loan doesn't have to get repaid right away. It stays with the property, so it goes. The repayment becomes liability of the future owner of the building. And like I said at the beginning, it's funded by the private capital providers and all that. Next slide, please. So why is CPACE? And my answer would be why not? Because it provides 100% of the eligible cost. Now, when I say 100%, um, there's only one caveat. State of Illinois PACE Act allows only 25% of the market price, market value of the property to be funded by PACE. So there is no, and why not? Because there is no personal guarantee, and it frees up equity for the other priorities, and it runs long term. We have seen PACE loans that we have closed few. They run from 20 to even 35 years. I know I said 30 years here, but it can go up to 35 years. It's a long-term financing. And it brings a positive cash flow. How? Because eventually when make your building more energy efficient and use renewable and all that, you would generally, 99% of the time, you will have positive cash flow by the savings, your operating costs and the utility and all that would be larger than your repayment per annum for the loan. And like I said at the beginning, the liens runs with the property transfer and all that. And if you have tenant in your building, they may share the cost and the savings with this program. And potentially you will check with your accountant, but potentially it's an off-balance sheet treatment. Why? Because since there's a special assessment, the repayment of the loan comes through the property tax system, and property taxes are not a balance sheet item. They are, they're off-balance sheet item. And at the end of the day, it reduces waste, greenhouse gases, and all that, and improve experience. And with the water conservation and all that, of course, it reduces a lot of waste. Next slide, please. So these are the eligible projects in Illinois: office, industrial, multifamily, retail, healthcare, hospitality, nonprofit, agriculture, mixed use. Now, if you have, like Claire said, about the 5+ unit rental apartment in a multifamily, that can be eligible project. Anything less than that becomes quote unquote residential, just like residential homes. Condo buildings are also residential homes. They are not eligible for this type of financing. And it can be both new construction and renovation. Some of the couple of projects we have done that they already have done the work. So we have done a refinance. There's Illinois State PACE Act allows 36-month look back. So we were able to refinance their clean energy portion of the improvements that they have done. Next slide, please. And these are some of the, you'll have, by the way, you'll have the slide deck. Cassie is going to send it to you. There's a lots of things listed here. Only thing I'll tell you this, one great thing Illinois PACE Act did, it did not list any of the eligible improvements. It just, the reason being, because we have innovation coming up all the time. We don't want to limit the newer innovation in the clean energy sector to be excluded from this program. So, but right now, you can see your typical, energy, water efficiency, renewable, that includes obviously solar, geothermal and wind and biofuel and all that. EV charging station I talked about. Resiliency is important because, well, we're in Illinois. I guess we are experiencing some adverse weather that we haven't been for a long time. But think about it. If you're in Florida and then the hurricane always happens. If you're in California, there's a seismic activity always going on. So resiliency is important, and it can be funded through this program. And like I said, the water use also. Next slide, please. Typical CPACE financing terms, I talked about it. It says up to 30 years, but it can go up to 35 that I have, we have, like I said, it's a negotiation between the private capital providers and the private property owners. If they can negotiate a 35-year term, that's great. Typically interest rates are fixed, but typically they are at par or lower than the commercial rate that we have seen. There's a minimum size we say 50,000 just because the capital providers don't want to work on projects which is less than $50,000. But there are some, alternative companies coming up. They would actually do smaller projects and all that just to satisfy the small business sector. And it says loan to value 5 to 25%, but Illinois Act allows only up to 25%. And so I think I covered everything from this page, and we can go to the next one. We have a couple of examples of the projects, actual projects that we have done in office building in Ontario Street in Chicago, and it was only $1 million CPACE. They had 29-year term, as you can see. It was much more than 20 years, and Pace Equity is the capital provider, and it resulted in an annual savings. Dollar figure was almost 15,000 $215,127. And also we're very interested, obviously, on the climate. So it reduces the energy savings. You can see the numbers from the kilowatt and the metric tons of carbon dioxide that goes into the environment. Next slide, please. This is a very favorite project of mine because there was a historic Ramova theater in Bridgeport area that has been sitting idle and dilapidated for a long, long time. There is a gentleman and his wife. They took initiative to revive this, and they have lots of help from government, including the CPACE, and they got some TIF money from City of Chicago. But this CPACE financing was 7.4 million, and I have visited obviously before and after. So before any work was done, to be honest with you, I went inside the building, and within 3 minutes, I wanted to get out. It was so bad, and who knows how many big rats were there too. But after the after the renovation was done, it's a fantastic place, for the neighborhood. Not only for the neighborhood, also for City of Chicago. There's a lot of good concerts and community programs that goes there, and as you can see, the tremendous financial savings that they have achieved through by doing this clean energy portion within their rehabilitation and saving a lot of energies in terms and carbon dioxide that goes up in the air. So next slide, please. This is more, more if you are from a community, if you're from a town, if you're from a municipality, this page is more toward you, because what it does by having this program and having access to this program for your property owners, you're stimulating, economic development and lowering, helping them lowering the cost, revitalizing your building stock. And obviously, you are meeting, as Lindsay is in charge of the sustainability in Oak Park, you are meeting, hopefully meeting some of the sustainability goals through this. And there are lots of programs that are available. Obviously, we say it's an additional resource available, but it could be a very, very good resource for your capital stack whenever you are doing any renovation. And you should always think about incorporating clean energy, efficiency, and renewable and all that, water conservations into your improvement. And I believe next slide is the final slide, has my name and email address. Feel free to email me. I'm very good at answering emails. Email me with any questions you have, and you'll have the deck. Hopefully, you'll be able to study it a little bit. And any clarification, anything you need, I'll be happy to answer all that. With that, thank you very much for your patience.
Thank you very much, Mohammed. I love the examples that you shared. I think that the CPACE program is really wonderful, the way that it's set up so to make it easier for building owners to invest in their properties. And it's great to see the results of some of those investments as well. And also the savings. I mean, the Ramova Theater saving $500,000 a year in costs, that's significant. So we're so grateful for you and your team that offer programs like this and work with renovations to and buildings to do these sorts of projects. Thank you. Well, I want to thank all of our speakers today. Thank you, Lindsay, Claire, and Mohammed for sharing about your programs and initiatives. I do want to open it up if anybody in the room has questions directly for our speakers. You're more than welcome to unmute and ask your question directly or pop it in the chat. But to kick us off, I do have a question, or I have some questions that I'd like to ask to get us rolling here. So for the clean energy investment tax credit, Claire, I know you didn't want to go too far into the apprenticeship standards, but I just had a question around how can you tell if a company complies with these apprenticeship standards? Is there a question that people should ask? Is there some way to really get at that to make sure that they're aware of the requirements of this program and just to make sure that I just want to make sure building owners are set up for success to take advantage of the tax credit and comply with those requirements.
Yeah, that's a good question. It's kind of a complicated answer. So there's two parts, right? There's the prevailing wage part and then the apprenticeship standards. And so the prevailing wages is relatively easy. Most contractors will tell you that they're complying with prevailing wage, right? They're paying the higher of the state and federal prevailing wage requirements for their area. In Illinois, the state prevailing wage is almost always higher than the federal prevailing wage. So as long as they're familiar with prevailing wage standards, you can probably trust that they know what they're talking about. The apprenticeship standards are tricky. They're definitely more difficult. Um, that one, if you are trying to get the bonus credit and meet prevailing wage and apprenticeship requirements, I would highly encourage working with a CPA or a firm that knows exactly what those apprenticeship requirements are, because it's not as simple as just following prevailing wage standards. There's additional apprenticeship requirements about how many apprentices you need to have on site, and then how many, journeymen you need to have working with them, and it's somewhat complicated. So if you are, going after that bonus credit. And I will say, like, the feedback that I've heard from folks is that it's doing that level of compliance work is really only worth it for larger projects where you're getting kind of a lot of money back from the tax credits. However, there are ways around the apprenticeship standards. If it's less than 1 megawatt project, you don't have to worry about it. If it's bigger than 1 megawatt, but it's still a relatively small project, there's ways to get around it. If you have like fewer than three like people working on the project, then like you don't have to do any of the apprenticeship stuff. But again, not a lawyer, but I would just like highly recommend like getting someone involved who knows those standards. I know not the best answer, but yeah.
That's helpful. I think that thinking about that and the planning of projects, making sure that those are partners that you have on a team to access those tax credits and requirements. That's really helpful. For your programs at Climate Bank, are there, I'm not recalling any of those things, but are there other things that, as building owners are doing projects that they should think about preparing to prepare for your sorts of programs and projects as well?
Yeah, I think it really depends on the program. I mean, the EERLF
Yeah.
program I think the biggest thing is the energy audit. So thinking about how to get that energy audit or assessment done. And again, IFA is like happy to work with anyone to try to figure out those requirements. Um, most of our programs are federally funded. So that in general requires, even outside of the tax credits, requires compliance with the Davis-Bacon Act, which is the Prevailing Wage Act. And also generally requires compliance with Build America, Buy America standards. So getting yourself familiar with just what those are and, asking your vendors up front if they can comply with those sorts of things, is definitely good. I think just, asking questions. Like IFA is here to help. Like we're also, learning along the way. And we're happy to try to figure out where your project might fit and, try to send you to other resources. So, don't be afraid to reach out, ask questions, and, use the resources available to you.
Thank you, Claire. I appreciate that. And I know our team has worked with Claire on other types of projects and super wonderful to work with and different types of in helping navigate all of these programs. So thank you, Claire, for being a resource. Um, there's a question in the chat. What are some resources to help estimate utility savings from a project? Would anybody like to take that on the call? I'm happy to help too, but okay, I can hop in. So at the Energy Sense Resilience Center, I would say definitely making sure that you get an assessment early on, whether it be working, say, with the ComEd, if you're doing a new construction project, working with the ComEd Energy Efficiency Program's new construction program, which can review your drawings. There's an incentive for architects as well to partner on this program, but going above and beyond Energy Code, they can provide not only design review and recommendations, but they can also provide incentives for those new construction above Energy Code improvements on a project. There's also the utility companies offer usually free free assessments that can estimate energy savings and cost savings. So that's a really wonderful resource to use. So ComEd, Nicor, Peoples Gas, North Shore Gas, they all provide these free assessments and programs. Some even provide some direct install, depending on the building type, depending on if it's income qualified as well. So the utilities are wonderful resources. Organizations like ours, we can work with you to provide an energy audit and do some of that deep investigation. But again, an energy audit is a perfect place to start to estimate utility savings for a project. So engaging either with the utilities, engineering firms, organizations like ours at the university, those are all wonderful resources to help you estimate the utility savings from a project. But the bonus is too, if you work with the utilities, they'll also estimate what their incentives are. So you can work that into stacking the incentives available for different project types. Mohammed, I see you're unmuted as well. Did you
You
want to add
know,
something?
I'm sorry, I'm unmuted, but you covered everything I was going to say about the utilities they provide that. So you got it.
Okay. Thank you. And Claire, great resource here. Can you talk a little bit about the Building Energy Hub?
Yeah, yes. The Building Energy Hub is kind of just a resource for building owners, developers, contractors, anyone interested in building energy efficiency. They have different funding and financing resources up on there. They also have kind of lists of vendors and contractors. If you're looking for an energy auditor or something like that, they do have a list of vendors that they work with. And then guides on building performance and decarbonization, on the Illinois Stretch Code, just all things building energy efficiency. If you want to look for resources there, they also have a help desk available. So if you want to talk to someone directly, you can contact them through the help desk. So.
Thanks for sharing that resource, Claire. I appreciate it. And thanks for your questions in the chat. Again, if anybody also wants to unmute and ask a question, feel free, but keep on the lookout on the chat as well. Lindsay, I see you want to add
Yes.
something too.
I'll just hop in on that. And first of all, second, what Claire said about the Building Energy Hub, it's a great resource. And also just make a pitch for benchmarking. Even if you're not in Oak Park or your building isn't 10,000 square feet or higher, anyone can have a free account through Energy Star Portfolio Manager. And that's just a great way to see like your trends in energy use. And then after making any improvements to see how that changes and affects that over time as well.
Thanks for mentioning that, Lindsay. And I think I was actually going to ask you that question. Why is benchmarking important then to help you identify utility savings and opportunities? If you could expand on that a little bit, that would be awesome.
Sure. So, the saying goes, you can't manage what you don't measure, right? So that really at the core of it is what benchmarking is for. So you can see over time any changes that are happening to your consumption of energy or water, and that can help kind of identify when there are issues, when there are things that need to be addressed. Also, because Energy Star Portfolio Manager, I'm going to get the number, I'm terrible with numbers. I'm going to get it wrong. Tens of thousands, I think, maybe hundreds of thousands, tens of thousands of buildings that are within this database over uh, more than a decade. So there's lots of data that Energy Star has access to compare your building and your building's data to other similar buildings in similar climate zones. And that gives you that comparison number. And so that can also help you identify, like, even if your energy use is staying really constant or even going down a little bit, but if you're seeing compared to other similar buildings that your energy use is high, that also can help identify where that you may have some opportunities that some of these other programs could help you identify for some significant savings.
Thanks, Lindsay, for talking about that. I think that's really important. That's another tool that can be used to estimate those utility savings or identify opportunities for energy savings. Because if you're really high, then there's opportunities to reduce that energy use intensity and that footprint of your building. I'm going to go to Mohammed. Mohammed, since we're on the theme of identifying utility savings or energy efficiency and savings, how do you do that in the CPACE program?
Just by, CPACE funds so many things, right? So by reducing energy uses, you can have from building envelopes to Energy Star HVAC system to the LED lights to energy efficiency windows, mostly windows, some doors, but mostly windows, things like that. So that's where you realize a lot of savings. It is a program that started in California about 14 years ago. And what in the industry, what we call SIR, savings versus investment ratios, is pretty well tracked. And we have seen those savings numbers nationally reported in a significant way. So,
Awesome. And to qualify for CPACE funding, do you have to have an energy assessment, or is there an energy efficiency or sustainability review of the project, or can building owners come with that information and when they apply? How does that work?
so state to state is different. I'll tell you this: Illinois State does not have that. Why? Because I'm sure you know of LEED certifications. Buildings were built with LEED certification without hoping to get a medal, right? Because they just wanted to be a better citizen, and they wanted to be a good citizen with their buildings, and that's why they do it. We don't, a couple of states I know of that they have this energy assessment. However, energy assessment requirement. However, it is a good practice to do the assessment. At least in that way, you will know where you need to make improvements and all that, especially in uh, rehabilitation projects and all that. So,
Awesome. Thank you, Mohammed. I appreciate that. We
yeah.
have only a couple more minutes, one more minute here. Does anybody have? Oh, here we got one more question. Which types of properties do you find typically do geothermal improvements? That's a great question.
I have little bit knowledge about geothermal that I was able to, with my limited knowledge, I was able to tackle the geologist in meetings. Illinois State is a very good state for geothermal, and typically the answer would be the larger projects because it's very intensive. Um, University of Illinois obviously has a fantastic, you know, department that handles these issues, and they can shed a lot of light on the geothermal issues in all, Illinois. But I would say, like if you are doing a large box retailer, you have a huge parking lot. You're doing and that parking lot can be used for a loop basis, geothermal, versus drilling holes and going down a couple of miles, and all that. So um, generally, large projects would be good because of the cost associated with it.
Yeah, I'll echo that larger projects tend to be better for geothermal, but not to say that, single family, multifamily buildings also can't do it. There's lots of different types of geothermal you can use. One of the most common places that we see larger geothermal projects are on like university campuses because they have this network of buildings that they control, that they can see energy usage for and like heating and cooling bills for. And just like being able to manage a larger range of buildings, it tends to result in like lots of increased savings for them. But also individual school buildings could be great candidates for geothermal projects as well. It can really cut down on their electricity costs. Anywhere where you have heating and cooling to be a very large expense of the building is a great place to think about doing a geothermal project. So yeah.
Awesome. Thank you, Claire. And Claire, do you have programs available on for geothermal at all at the Illinois Climate Bank?
So the Energy Efficiency Revolving Loan Fund is a good bridge loan product to use to pair with a geothermal project. We had phase one planning grants for large community scale geothermal projects that were available earlier this year. Unfortunately, that application is already closed, and we are not opening a new one in any future years. There will be a phase two available, which is the grants for the actual deployment and the project implementation. Um, and you can apply for phase two if you are not a phase one awardee if you would like. However, it's expected that you have done a lot of, planning, feasibility, pre-development work, stakeholder engagement, like a ton of pre-work in order to be a competitive applicant for phase two, which is what we intended to fund during phase one. So you could still apply if you didn't apply in phase one, but just keeping in mind that there's a lot of pre-work that needs to be done in order to get a competitive application in.
Awesome. Thank you, Claire. And we are at time. We're a couple minutes over. But thank you for all of your questions. Thank you to Lindsay, Claire, and Mohammed for sharing your expertise and program information. Please don't hesitate to reach out to any of these folks on our webinar today for more information or guidance and support. After the session today, we will upload it to our YouTube page. We will share that with all attendees along with the slides. So please share this with other colleagues in your network as well as a resource to help navigate low-cost capital opportunities and programs to build more efficiency into your buildings and your projects. So thank you so much, Lindsay, Claire, Mohammed, for your time today. Thank you all for attending as well. Please keep in touch and we'll see you on the next session. Take care, everybody. Have a great afternoon. Thank you.
Thank you. Bye-bye.
Bye-bye.